Welcome back to the podcast. My name is Doug Sandler from Turnkey Productions. Over there, that guy is Mr. John Browning. John, welcome back to the podcast, Mr. Floridian. How's it going down there?
It's going great. Beautiful weather. It's the time of one of those times of year where it's the Northerners. I love those Northerners too, by the way, but they've all left, so the traffic goes down just a little bit, but it's still not blazing hot, and so it's an enjoyable time here in Florida. Yeah.
Well, we are outside of mudslide season here in Southern California, and we are on to earthquake season. So
Okay.
we're ready to go, man.
There's only a couple seasons in California and so Southern California, and those are it.
Oh my gosh, it's all of the potholes. I never thought from a guy that came from the East Coast to the West Coast now, I never thought there would be as many potholes on the West Coast because I thought it was all because of ice, but it's just because of running water and runoff, all of that. The roads here are really in bad shape. Bad
Oh
shape.
wow. Yeah, I didn't realize that either. So yeah, that makes sense though.
Well, and I thought by paying $5.50 a gallon for gasoline, I thought that would get me out of it. Somehow
Yeah.
it doesn't work. You know,
It doesn't
curious.
matter how much they tax you, they can spend it faster.
They absolutely can. And it's interesting, not that this is related to financial planning or building my best life, but I tell you, part of my building my best life is wanting to get a ride-on mower as opposed to a push mower behind my small lot behind me. It's big enough that I could use a little tractor. So I went into a John Deere dealership, and was it talking to them about getting a gasoline ride-on mower, and their showroom was completely empty, and I thought that they just got sold out of everything. They said no, on January 1st of this year we are no longer allowed to sell gas powered mowers. Like
Sounds like California.
nowhere in California can you buy a new gasoline powered mower at this point. Ride on, push behind, they all have to be battery powered now. I had no idea.
Wow. Well, they're going that way for cars in California too by a certain
Yeah.
date.
Yeah,
Yeah.
they're the first to put whatever the legislation in action. But I'm gonna have to drive to Nevada in my gas guzzler pickup truck to pick up a ride-on mower so I can drive it back here.
Yep. You know what? That's absolutely going to happen. Yeah.
Yeah. Gosh, so those poor dealerships there. Well, the price of the ride on the battery powered was like twice as expensive as the gasoline powered, but neither here nor there. That is just telling you a little bit about Southern California lifestyle for sure.
For sure. Yeah.
All right,
That's good
so
though. It's good that the grid in California is so amazing that they're going to be able to handle all that extra power that they're going to need.
yeah, they're already browning us out. I said, hey, there you go, browning. They're already browning us out, John.
I know. I know.
Come by that in
All
a
right,
million tricks.
enough of the electric craziness.
All
What
right.
are we
Yeah,
talking about today?
we'll talk about that on a future episode. One of the things that I would love to talk about, because I hear questions a lot, and I'm not even a financial guy, but I hear questions a lot about the benefits of term versus or whole life, or the benefits of whole life over term insurance. And so I thought this would be a possibly a good subject for us to talk about today. And I'm pretty sure I know a guy that knows a little bit about that subject. So why don't you kick it off? Term versus whole life. What's better? What's worse? What's indifferent?
Yeah, so you will run into insurance agents and financial advisors that think, well, term is just throwing your money away and don't do it. Here's the issue though. How many of us have had a family and not been able to afford whole life or some other permanent life insurance? Like, I think everybody's raising their hand right now, right?
Yeah.
We were there, and yet going without life insurance, to me, if you have a family, is just, we'll just say, not a good idea. Okay.
Hmm.
Think about this for just 1 second, and I'm not a big sell based on fear, but really think about this. Your income supports your kids and your family. None of us knows if one day we're going to trip and fall and hit our heads and that's going to be the end. Or another thing, more people get disabled in accidents than
Hmm.
actually pass away in accidents. And disability insurance is something that very, very rarely gets talked about, right?
Right.
So not having it, to me, if you have kids that are depending on you, is just simply not an option. It comes before investing and almost not quite before the emergency fund. It is super, super important for families. Even if you love your wife or you love your husband and they have come to depend on your salary for whatever reason, not having that life insurance kind of just not really an option. And when I was younger, I did not realize this. So I hope the younger people are listening. Term insurance is absolutely fine, and it is quite affordable when you look at it. If you don't believe me, call me up. I will get you a quote that works for you, and you'll be surprised how much life insurance you can get for a reasonable price. The comparison.
Mm-hmm.
So whole life and IUL, so index universal life, which I happen to like a little bit better for most people, is a form of permanent life insurance. So you put money in, part of that money goes to the cost of insuring you, right?
Mm-hmm.
Another part of that goes towards building and investing, becomes an investment. And this way it actually it becomes less expensive than term. So people think I'm crazy when I say that, right? Because I can get, say, 500,000 of term insurance for, say, a 30-year-old or something like that for
Couple $100.
$50, a healthy with 50 bucks or something like that a month.
Yeah.
And an IUL, index universal life, or a whole life policy might cost them like, for that much, it might cost them like $400 a month. I mean, it's a big
Right.
difference. So
Right. Big
how
difference.
is that?
Yeah.
How's that less expensive? Well, over time, that policy, that permanent policy, is going to end up beginning to pay for itself. And in addition to that, at some point in the future, if you, number one, need it, or number two, if you'd like to use it in retirement as part of your retirement fund, so you buy a big enough policy, you can start to borrow from yourself, right? It's your policy. You begin to borrow from that because at some point in your life, you need that life insurance less because you prepared for retirement. And so then the two things happen as you get older. So one is you can start borrowing from it. You don't have to pay any taxes on that, right? Because you're just borrowing it. You're not withdrawing it, you're borrowing it. So it can be a really viable way for somebody who's maybe maxed out their IRA, their Roth, their 401k, everything else. They're a high net worth individual, they're making a lot of money in a given years. They can still contribute more to essentially a tax advantaged account by purchasing life insurance. And it can be a substantial, there's no limit to that, right? You can buy it, well, pretty much no limit. You can buy pretty big life insurance policies. And so you've got that. Cool story on that is that's the reason that we have Disney.
Tell me
So
about that. Tell me about
yeah.
Walt Disney and what his experience was.
All right. So think for a minute. Can you imagine going to a group of investors and say, hey, I got this great idea. Doug, I got this great idea. I need some investment here. I want to create a mouse. Okay. It's a mouse.
Already you lost me.
Yeah, I've already lost you, right? So he had a really tough time getting investors in, this idea of a mouse and what's animation and all that kind of stuff. You know what he used? And this is how old these products are. He used a life insurance policy, borrowed on that life insurance policy. That's what originally began Disney. And this happens a lot with people who start businesses. They borrow from their life insurance policies, better than an SBA loan, better than, because you're borrowing from yourself. It's at a fairly low rate that you pay yourself back. If you ever pay yourself back, eventually the policy pays the loan off because we're all going to die. Yeah,
Right.
it is a thing. So that policy then will pay it off. So there's a couple things about life insurance, two major things in the difference between the two. Term is great for younger people who just simply cannot afford that. And a lot of times what we'll do is listen, you need, on average, I suggest, at least 10 times your income in life insurance. People are like, whoa, that's a lot. Not really when you do the math on it. Many people recommend 20 times,
Mm.
because if you take 5% out of that, you were saying, I think on a previous episode, that the right now the high yield savings account are yielding 5%. So if you want
5%.
to take no rent,
Right.
no risk, 5%, 20 years, you can do the math on that. That makes sense. You need 20 times your
Right.
income in life
Right.
insurance to make up the difference. That's a lot of life insurance, and not a lot of people, either can afford that or do that. But at least 10 times your annual income
And
is
you can do
highly
it, and you
suggested.
can do a combination. That's what I had done. I had done some whole life and some term insurance because I needed, well, according to the financial advisor I was using at the time, a couple $1 million in benefit or in payout if something happened to me. But I couldn't afford all of that in whole life. Very expensive to do that.
Yeah. And some is better than none, right? So, but that's what we do with a lot of clients, especially if they're getting ready to retire in a few years. We'll buy term insurance for sort of that gap, and then we'll buy, a whole life or IUL in for the rest of it. And it's more of an investment account as well as life insurance. So combining them makes a lot of sense as well. And one of the greatest things, a life insurance agent with even more experience than 50 years in the business,
Wow.
was talking about some of the things that he's seen and done for individuals. So if you have a young child, right, and you can insure them, we've all heard of the Gerber life insurance
Hmm.
policy, all that kind of stuff. And you know, not the best policy out there, but it's something. But you can, if you talk to somebody like myself or a good solid insurance agent that knows what they're doing, say you just even want to put $100 a month into a permanent life insurance policy for your 1 year old or 2 year
Hmm.
old, 3 year old. And then when they get to be 18, 20, 21, you give that to them. Well, at that point, maybe it's worth, 50 grand cash value. They could never pay any kind of premium on that ever again and just let it accumulate over time. What a gift. What a gift that is,
You
right?
just gave me a great idea. I just had a niece that was born, and you never know what to get a newborn. You ask the
And
parents,
they
and
get
it's like
tons
they
of little
need,
baby clothes and
yeah,
everything.
baby clothes and diapers and all of that stuff. But the gift that keeps giving, like life insurance, and there's probably a way that you can structure it so that it's in a trust or something like that, so they don't even have access
Sure.
to it to take the cash value. But man, oh man, I can only imagine. I think about my whole life insurance, and I did exactly what you said. I borrowed the money to pay a down payment for a house that I bought in California. I wasn't even considering my life insurance. I didn't realize it until I found out it had like over 100 grand in cash value without taking anything away from the death benefit at all. And I'm like, oh, here's a great opportunity. I could have either borrowed it or taken it. So for me, I use that cash value, and I never would have even considered that. I'm like, I don't know how I'm going to be able to afford this house. And life insurance was how I afforded the house, which was great to think of.
Yeah, that's absolutely right. There's a lot of reasons aside from that life. But here's another great idea for life insurance that very few people realize makes just a lot of sense. So I'm just retiring. I'm like 60, 65 years old. And I love my kids, and I've decided I would like to leave each one of my kids $100,000. I have 6 kids, so that's $600,000. But I kind of want to live my life,
Hmm.
right? So I can take out a life insurance policy, and maybe I've decided I don't want to leave them $2 or $3 million because I want them to, stand on their own 2 feet and everything else. But
Right.
$100,000 a piece is kind of a nice parting gift, right? So
Absolutely.
they would get that, right, when I pass away. If I bought $600,000 of life insurance, they get that, and they would get that tax free because life insurance proceeds
Oh,
free.
yes. I love that.
So you get 100 grand and there's no taxes on it. Meanwhile, I don't have to worry about things. I can go on whatever vacation I want. And I'm not worried about, oh, I really wanted to leave some money to my kids, so I won't do this or I won't do that. And I won't live my best life. And then you get the kids like, oh, they're spending down my inheritance. No, I'm not. I already got you a life insurance policy. I'm going into the better nursing home. Okay. You know, because trust me, unfortunately, I've been involved in those conversations as well where, oh, geez, I don't want mom and dad going into the nice place. Yeah, which is horrible. But trust me, I have been in rooms where the families have been discussing exactly that.
I bet. I bet.
So just there's another way to use life insurance to with great effect.
What an interesting conversation to have. I think about also the early introduction that I had to life insurance and the combination of term versus whole life. And then the question was, well, how long do you want your term to last? Because there was like a 20-year term, there was a 10-year level, a 30-year level, I think 20-year level. And you have different responsibilities when you're 45 with a 5-year-old
Family.
that you
Yeah.
do when you're 65 and you have a 35-year-old that doesn't require your financial assistance any longer, but you still have a mortgage and you still have a spouse. And maybe you have a lifestyle that you've gotten up to and you don't want your spouse to have to live without being in that lifestyle at a certain point. So all of those things have to factor into the equation, I'm assuming.
That's the all of that factors in. And we haven't even talked about when you're a business owner.
Yeah, and that's the other thing you have to deal with if you're an entrepreneur and you have a partner in the business and then your salary is or your income is the revenue of the company is dependent upon your participation, and if you're not there they have to hire somebody else, so there could be life insurance that could pay for the person to come in that's going to have to take over for you for X amount of years until they're able to do it. There are so many opportunities in here. And I'm just talking about, it's not like negative stuff, it's like positive stuff. I kind of like, isn't it like solving a puzzle? I mean, I look at what you do
Yes.
in many ways is like you're just putting the right pieces together, to
Every
solve the
day,
problem.
every day I'm solving puzzles, solving for what people, want and what their best life is. And the other thing about a business owner, so I know of a gal, and we actually did a podcast together. Her name is Cindy Arrington, and it's been a long time ago, like a couple of years ago we did a podcast, and her story was her father had been a very successful businessman, passed away. The business was worth quite a bit of money. They get paid for the business, but they get paid over time. But since they sold the business, the IRS sees that as something they need to pay taxes on. The family itself almost went bankrupt
Mm.
because of the taxes that they owed. Had there been a life insurance policy in place, that could have been used to pay the taxes, all of that
Wow.
money coming in for the business. It again, like you said, it's a puzzle, and there's so many different variables and reasons that you need one over the other. We can't address it in one podcast episode, but
Well, fascinating conversation, and definitely one that many of the listeners in our audience, I'm sure, have questions about life insurance. What's the right life insurance? What's the right amount of life insurance? Where, based upon where I am in my life, what is helping me and my family build our best life, which is, of course, is the name of the podcast too. So, all good things, John. If somebody was interested in getting more information, what would be the best way for them to reach out to you so that they can get advice from you about what insurance to get?
well, if they take out their cell phones and they type in the number 321-421-5213 and then enter life and hit send, they're going to get my digital business card, which is going to have all my information, including a link to how they can schedule some time directly on my calendar. Or they can go out to guardianrockwealth.com and go to the contact us section and let me know what their question is. I will get back with them within 24 to 48 hours, depending on whether it's on the weekend or not. And I will get back to them with my best answer, and maybe we can schedule some time together to get into more depth.
Great, great idea. Well, John, thanks for sharing today. Thanks for this conversation about insurance. It doesn't have to be an ugly subject. It really isn't. If you've never talked to your spouse, significant other, your family about what happens after you're not here any longer, I know you don't like to talk about, your mortality in life, but I'll tell you, it certainly makes a lot more sense to have the financial conversations while you're here. A lot more challenging when you're not here to have those conversations. So pick up
Exactly.
the phone, do what John just said, get in touch with him, and we'll make sure we put a link in the show notes for all that stuff. John, thanks for being here on the show today.
All right. Thanks. We'll see you next week.